Hey everybody, thank you for joining me today. I'm Gio Aretos, the Principal Advisor at the Real Estate Investment Group with Nationwide. And we're here today to give the much anticipated 2020 Q4 market update. Those of you that have already been following us know how accurate our previous updates have been. We're very thankful and pleased to have you join us for this one. So let's just jump right into it. The big conversation, the questions that I get asked the most over the past few months, a lot of them have revolved around the election and what's going to happen. And a lot of the other questions have resulted around people wanting to know timeframes. When are things actually going to happen? There's a lot of up in the air. This is probably one of the most uncertain times in modern history, if not the most uncertain time in modern history. And I think that it probably is scarier now than ever before for most people who are alive and most people who are invested or vested simply in the real estate business. So I encourage everybody to watch the 2020 Q4 discussion that is also out on our channel. Get a little bit more deep dig into some conversations about some of these topics with some industry experts. So that'll follow this video, and you hope you guys watch that one as well. But let's jump right into it. So where we are on the spectrum of what's happening in this world and what's happening in real estate and what's going to happen in real estate prices. In order to understand that, you need to understand a little bit clear picture of where we are right now. And where we are right now is we're going into a period of political unrest and uncertainty. We're at the point of this recording, which is October 12th, 2020. We're just about to go into the elections. And those of you that know me and follow me know that I have a history in the financial markets, and I'm still tied to the financial markets. And I think that the financial markets really offer a lot of information about what's going on right now, and more importantly, where we're headed. So let's talk a little bit like that. Our opinion for real estate investors and economists is that the outcome of the election is going to be less important than people might think, at least for the short term, midterm. I don't think that it matters who wins the election as it regards affecting the real estate market and the prices. I do think that some have arguments for slightly higher tax paradigms if one party wins and the other doesn't. I think there's arguments for both sides. But for what we're going to talk about here today, I don't really think it matters too much. I think the train has already left the station. This is a train that has been propped up and has been created over the past months of this COVID pandemic. I think that the momentum that this current positioning has is unlikely to be even able to be affected by another administration. Goldman Sachs and Morgan Stanley put out reports a couple of weeks ago expecting for 5 more years of stagflation. I think they're spot on. I think that what we're going to see economically is going to be range bound for at least the next 5 years. I think that finding the top and bottom limits so that you know where you are and where you are going to be, that's going to be a moving scale. And I think that we're going to continue to update our members throughout this period of where we are and where we're headed. But for all intents and purposes right now, I think that we are heading towards a period that is going to need time to work itself out. We have eviction moratoriums that were just furloughed and are about to come up and come due or come for a reset. And we don't know where that's going to be. That's December 31st. We have eviction moratoriums in residential from the lending, the financial standpoints. Fannie Mae, Freddie Mac, they've extended through the end of the year. Don't know if they're going to continue to get extended. Very likely they would. We've got furloughed workers everywhere across the board, all throughout the country. Las Vegas is probably near at the top of the list because a lot of our employment, more than 10%, a good majority of our employment comes from tourist traffic and then trickles down. So Las Vegas is definitely a candidate for this uncertainty to play a role. But it's not even until the last tranche of government intervention, free money, PPP, loan plans, forgiveness, whatever you want to call it. I don't think it's going to be for a period of at least 6 to 8 months after the last government infusion of money before we're really going to know where we stand. Now, on October 8th, the senior vice president of Fannie Mae, his name's Doug Duncan, senior vice president, said that they were expecting that the jobless rates figures that we're hearing right now could be off by as much as 100%. And that they're saying that their period of review is going to start at the end of 2021, wherein they believe that by the end of 2021, the jobless claim numbers will be double what we're hearing now. Additionally, they feel that as an economy, we're only going to be able to recapture 65 to 70% of our total previous pre-pandemic capacity at such point that we actually return to normalcy. Now, I think the end of 2021 is actually a little bit too aggressive. I think that maybe might be at the very beginning of a range, but we're putting our numbers closer to Q2, Q3 2022, even with a best case scenario that we have a vaccine that works and it gets widely spread and enough people take it for it to matter. And that we don't have any other huge pandemic-like shutdowns or other things that cause between now and then. I think the first chance at normalcy is not going to be until that time. I think there's way too many time frames that are still up in the air. And so I think it's really important that anybody that is saying that they can clearly see or that they know what's going to happen, with certainty, or is really not understanding what market we're in. And that's important for anybody that listens to a variety of different topics and information. There's a lot of misinformation out there. And so it's important and super important that you consider it all. And you... calendar. Sorry about that. I thought I had everything muted. It's very important that you do consider all angles and that you realize that there is no certainty. And the reasons there's no certainty are many. We mentioned a few of them right now. We got political tensions. We've got prices going up. And for all intents and purposes, you have, a significant portion of the community, of the population that is on some sort of government aid that's holding out until the next one. And so for some, or for many of those, you're still seeing economy move, people spending money, even though it's not theirs. Many forbearance don't realize that money is just getting tacked on to the end. It's not the same thing as forgiveness. There's a good portion of people out here that are kind of unrealistic about where we actually are. They think that, the sky can't fall. But I think that history shows that it has time and time again, and I think that we are going to see it fall. But as was with the conversation, the discussion that we had earlier today with our expert panel, we are not seeing the kind of drop in prices that people are relating it to, which is, the 2009 crash or any period in there. It's not going to be like that at all. The underpinnings of the financial markets and the underpinnings of our economy pre-pandemic were strong. The reason we're seeing a strength in prices across the board, and this goes across residential, commercial, industrial, all facets, multifamily, actually at the top of the list. We're seeing a lot of traffic and tons of cash, lots of 1031 exchanges, lots of money going into the opportunity zones, tons of cash coming to Las Vegas in particular. Lots of this is exodus, what I like to call the California taxodus, this mass migration of people coming out of these higher tax states like California, New York, Illinois, Oregon. We're seeing traffic from Washington. People want to get out of there, coming down here for a number of different reasons, weather being one of them, but our tax structure being another, the growth trajectory of the city, and historically low inventories, which, with coupled with high demand that's fueled by historically low interest rates. And believe it or not, the pandemic has actually caused a rise in savings, although I think that that's going to be short-lived. Smart investors are taking their money and they are leveraging it using the proper funding because money is so cheap. And we're seeing a lot of cash commit themselves to the market by purchasing properties. Multifamilies are at the top of the list, definitely the most underserved market, not only here in Las Vegas, but across the country. Multifamily, you're going to see, is going to be continuing to gain momentum as new lifestyles emerge. New living styles are going to emerge. Co-living is going to be a sort of starter home for people, and we're going to see less and less of the typical mid-range houses being built for new construction. You're going to see a lot more urbanization going across the platforms, especially in the large metropolises. We saw that this morning as we listened to our affiliate Tom Campone from Chicago. But historically low inventories just across the board, basically coming from people just holding on to their properties, not knowing what to do, or those that don't need to sell are just holding on. There's so much uncertainty, and so that's certainly creating a lot of the low inventory, but low supply. But the high demand is only getting stronger, and especially getting stronger for places like Las Vegas, where we're seeing a rise in prices across all condition classes. Those of you that follow us know that we use a 5 scale for rating a property, and we're seeing typically price appreciation would always happen at 4 to 5, 4 and above. But now we're seeing price appreciation happen in the lower conditions, the bottom end of the market condition-wise. And that's how we see that there's some really strong underpinnings for growth. And that's one of the other reasons why prices aren't really going to drop as much as some people would like you to believe. Are we going to see a buying opportunity? We are. And when is it going to come? It's going to come Q2, about Q1 and a half, to be honest, is when our earliest part that could possibly start happening is about halfway through Q1 2021, which is coming up. So we're talking about February-ish, mid-February, all the way through Q2, Q3. And then I think by the end of about Q4, mid-Q4, November-ish, Q4 2021, we're going to really start to have our first good look at what these forbearance figures have done to our economy, how many people are back in the workplace without government intervention, how many people really have a job, how many people have the same job, how much strength is there to get us off of life support. And then that's where I really think we might see either a big bump in prices or maybe another slight pullback. At this time, it's uncertain to see, but our indicators are leaning towards a huge growth. Huge growth, let's define that. Is it going to be, ridiculous 20-30% rises in prices? No, but I think it will come up significantly above whatever the bottom average price is, which I believe is going to be about 15%. I think we may swing from that bottom 15% all the way up to about a total of 30. So another 15% of on top of where we are right now. But we're going to go down before we go up. And so after that, I still believe we're going to have strength. And if at some point we do get some kind of a miracle solution to the pandemic where people feel comfortable enough to go and resume their normal or pre-COVID, pre-pandemic lifestyles, which I don't really think we'll ever get back to fully. But any kind of semblance of that, the Vice President, Senior VP of Fannie Mae is saying we're only going to, at best, recapture 65 to 70% or 75% at max. And I think that puts us at about 28,000 maximum in the Dow, 35 and change on the S&P. NASDAQ, you can't even quantify because there's so much money going into tech because that's really the only place that has the biggest amount of growth. But for those who are risk averse or those who like to take some risk on but want a security of owning title to a property, I think real estate is probably the best positioned of all asset classes right now to be able to realize both steady and consistent growth as well as the opportunity for some massive growth. And I think that the massive growth is coming in through the commercial, the multifamily, and the industrial. I'll give you an example. We have a project on the table by a very well-respected developer here in town that's offering a guaranteed 20% return on investment secured by the real estate, and it's normally being rented and leased for long-term secure leases by Class A tenants in the most part. And lots of logistics are coming in. It's an industrial build, and we're seeing stuff like that come into the market now. And this really shows how the infrastructure of not only our town is growing, but it's happening all over the place. COVID has really given the leg up to Amazon and Google and Walmart and Target and the retailers who are pivoting, who have the money and the ability to pivot, rebrand, remarket, and redistribute. And they are doing it through a change in their infrastructure. They're building out their logistics. So we're seeing a lot of strength in industrial, really across the board throughout the country. So don't let it fool you just because you don't maybe see it, you don't maybe live around it, or you're just oblivious to what's going on, which is a lot of people just don't know. Mark my words that there's going to be some major logistic and infrastructure changes throughout every major city in the Americas. Having said that, commercial is also a great time to be purchasing right now. Commercial's taking a beating, mainly residential. I mean, mainly retail commercial is taking a beating, for obvious reasons. But it also shows how much old money there is out there in commercial, especially here in Vegas. And a lot of that old money is just like, you know what, I'm done. And so they're put up for sale. A lot of them are fire sale prices, which are still inflated more than what you might believe, but still down way from what they're worth. Lots of value adds opportunities. A lot of medical buildings are really, a lot of medical is coming into Las Vegas in major ways. Lots of companies expanding out of their home territories, lots coming from the West Coast, California, San Diego, all up north in California as well. Lots of people relocating here. The infrastructure is really, really changing, which is going to continue to support residential prices. So I really don't think we're going to see a huge drop. But if you are wanting or needing to sell your property of whatever kind, residential, commercial, industrial, call us now, because you really want to get in if you need to sell it before the end of the year for tax purposes, or if you need to sell it for a 1031 exchange or what have you. You really do want to get that property out there now, because I think December is going to be a rough, slow month for all transactions. You've got Hanukkah early in the month. This year we have what I believe, if we do not get any government infusion before at least the beginning of December, I think that the economy is going to be slow for Christmas shopping and holiday shopping. Might see a little peak. You're not going to see your typical Black Fridays being held. You're going to see different and new marketing styles for retail that are going to take advantage of when the people get the money in their account, hope that they spend it there, and then get some good news and media to bring us into 2021, where I think we're only going to get a good month of good news. And I think mid-February, you're going to start seeing that price inventory start coming on the market, and that price is going to start to drop a little bit. I think max 15% probably realized in Q3. And then from there, a little stagnation as we head into 2022 with some more certainty. And I think that's when we're going to see prices. So it's not a very short period, but I am advising all of our clients right now to start being prepared, put together strategic plans, get your finance options in order. It's never a better time than right now to leverage your money. Lots and lots of lenders out there looking, private lenders looking, public lenders looking to write new loans and get money back into the marketplace. So there's no better time than now to talk to one of our experts, or if you have your own, talk to them and find out what your options are. Put together your acquisition plan, and then sit at the ready and start looking at properties so that you can educate yourself as to what's happening and get a little bit more of confirmation, not have to just take my word for it, but you could actually see in the marketplace. And I saw it a little bit. I saw a couple of properties come out this week that I didn't expect to see, certain price points in certain areas that I'm watching, and they came up and sold within 36 hours. So there's a huge appetite there, and some of the properties are coming back a little bit. I think we're seeing the little small snowball being rolled, but it's going to get bigger, and it's going to be obscured by all the media. So you really got to be paying attention to what's happening with the numbers, and we're going to do our best at the Real Estate Investment Group to keep giving updates to all of our members and followers who are wanting to follow along and see the types of things that are affecting the markets right now. That's our market update in short. There's some more conversation. I encourage you all to go and watch the follow-up video to this, which is our panel of experts from around Vegas and a major metropolitan area, along with a national lender who's got information in all states, and a little bit more conversation about where we might be headed and how you can take advantage of this time. It's not all gloom and doom. You just have to know where to look. Again, I thank you very much for following us, for being our fans, for supporting us, and for giving us the ability to serve you and make real estate as great as it possibly can be for everyone. We thank you for your fandom, and we encourage you to watch some of our other videos on our channel. And please, we love comments. We'd love to get the conversation going, talking and talking about these topics and presenting different viewpoints is really the key to creating a widespread education and knowledge for everybody. So thank you again. I look forward to talking to you guys again. I'll put out another update as soon as I get more information enough to give a little bit more guidance off of this one. Thanks to you all.